If you ever thought about signing up to one of those fancy tax schemes to save a fortune, stop. Frankie Dettori, one of the most successful horse jockeys on the planet, fell for one of these scams and it's just bankrupted him. Don't think this is just something that happens to celebrities, because these schemes are being pushed on everyday business owners just like me and you. And when HMRC catches on, it's not just a tax bill, it can be bankruptcy or even worse. Now in this video, I'm going to break down exactly what happened to Frankie Dettori, the court case that ruined him, and the traps that directors are falling into, and obviously, most importantly, how you can protect yourself. Chris Worden, I'm from Director First, and if you're a company director, this is your wake-up call. Let's break it down, and I'll show you exactly what happened, what you can do to make sure it doesn't happen to yourself. So, what's the story? Between 2012 and 2017, Frankie Dettori was riding high quite literally. His income was huge, he wanted to protect it, so he was introduced to something called a remuneration trust scheme. And what they told him was something like this: Frankie, pay large sums of money into a trust, it's tax deductible. Then they said, then you get the money paid from the trust back out to yourself, tax-free, like magic. Like turning water into wine. Except it's not magic, it's bollocks. And HMRC saw through it in a heartbeat. And they said it was a sham, pure make-believe, and they demanded their money. Now Frankie appealed, he tried to get anonymity, he lost, and he's just been made bankrupt. And you know what? It's tragic, but it's not uncommon. And it could have been avoided. Now, I want to talk about how the scheme was worked and actually why it was doomed. So let's break that bit down. Now, in simple terms, Frankie paid money into a trust. He deducted those payments from his income for tax purposes, saying that they were a legitimate business expense. Then, the trust paid the money back to him, apparently tax-free. Sounds clever, right? But here's the reality. For a payment to be tax deductible, it needs to be wholly and exclusively for the purpose of your trade. Was giving cash to a trust doing anything for his jockeying business? No, this wasn't a business. It was a loophole that didn't work. And in today's world, these schemes are dead on arrival. HMRC uses something what's called the General Anti-Abuse Rule, or GAAR for short, and it's used to blow them apart. Now, if a scheme cannot reasonably be regarded as a reasonable course of action, it fails. That's it. It doesn't matter what the paperwork says. If it looks bent, it's bent. Now, there's something called the Northwood case, and it was sort of, if you will, a blueprint for the fail. Now, I want to talk about that case, and this was a key legal case that hammered these schemes into the ground, and it was Northwood versus HMRC. It was about another remuneration trust, just like the one Dettori used. And what happened was, Northwood paid money into a trust, claiming it was tax deductible. The trust then paid the money back to Northwood as non-taxable distributions. And HMRC have said, no. They basically argued it was a circular arrangement. There was no real transfer of ownership or purpose beyond the payment. And there was something called the First Tier Tribunal, FTT for short, and they agreed. They ruled that the trust was a sham. They said it wasn't a real arrangement with substance, just a tax dodge. And the FTT tore the scheme apart. And they pointed out that the payments were not wholly and exclusively for the business. They also said that the scheme failed under the GAAR. And the result, Northwood lost. The company had to repay the tax, interest and the penalties. And this decision set the precedent. And it basically told HMRC, go after any of these schemes, and if the scheme looks dodgy, you'll win. And that's exactly what's happened. Because once HMRC had this ruling, they had all the ammo that they needed. So, you've got to ask the question, who told Frankie to do this? And this is where it gets a little bit murky. The scheme was promoted by a chap called Paul Baxendale Walker. And you're thinking, who is he? Well, he's a struck-off solicitor. So that would make me question things a little bit. And believe it or not, a former porn mogul. Now, this guy has been flogging tax avoidance schemes for years. And even though he's bankrupt himself, HMRC can't to shut him down. I mean, come on. Who takes advice off a fat personal trainer? Now, the worst part is it's often accountants who recommend these schemes to the clients. And the reason they do is they get a huge commission. I've been told it's 10% of the money paid into the trust. Now, Frankie put 5 million in. Someone's pocketed £500,000 commission, and that's just for the introduction. And what happens when it all goes wrong? They walk away, and you're left holding the baby. And this is happening to ordinary people. So, you might think, yeah, I'm not Frankie Dettori, doesn't affect me. You're wrong. Everyday business owners are being sold these schemes. And it's often people with a much more modest income than Frankie. They're promised tax savings, they're told it's legal, and they're left ruined when HMRC come knocking. What happens is, HMRC will backdate the tax bills, they'll charge interest and penalties, and there'll be legal action. You can be made disqualified. Some cases like Frankie Dettori are made bankrupt. And I've seen it firsthand. Listen, I've spoken to directors over the years who are terrified because they signed up to something that they didn't understand. And why these don't work, I mean, I want to be crystal clear. These schemes haven't worked for years. HMRC is aggressive. The general anti-abuse rule lets them shut down anything that doesn't pass the smell test. Northwood set the precedent. Dettori's just the latest example. You can't outsmart HMRC with smoke and mirrors anymore. And if it looks dodgy, it probably is. Now, I want to sort of wrap up a little bit on how you might be able to protect yourself as a director. And what should you do if you're worried about it? Now, first of all, don't sign up to anything you don't fully understand. Certainly off somebody who sounds like they've not got a track record in doing what you want. I mean, it's really important you take advice of people who are qualified for that advice, are doing the do, right? If someone promises you a massive tax saving with no risk, I would run a mile. Get independent advice. Don't trust someone selling you something. And if you're in a scheme now, get help. Don't wait for HMRC to come right to you. Stick to legitimate tax planning. Now, I'm not an accountant, but it's things like pensions, allowances, the legal ways to reduce your tax bill, but it's not a magic bullet. And you know what? I want to talk about why I feel slightly sorry for Frankie Dettori. You know, okay, he's made a mistake. He was greedy. But he's also been sold a dream by people he thought he could trust. And now he's bankrupt. His reputation's taken a hit. And the people who sold him the scheme, they're probably just walking around with their pockets full. So, I hope you found the video useful. If you've got any questions, please drop them in the comment section. I'll answer them personally. My name's Chris Worden. I'm from Director First. God bless.